Guys, we've been saying for a long time housing's overheated. We're due for a big pullback. Well, guess what? Data's coming in. We're going to talk about that. Let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
So, Bob, you live in a pretty high demand area for housing. I'm from a high demand area in Hawaii. There's not a lot of inventory there. That was pretty sought after during COVID. However, we've been talking about how the market's really over its skis, and it smells a lot like the pricing conditions of '08, although not the same market quite, but similar in that things are really overvalued. And now it looks like the data is starting to show that what we've been warning about might be coming to fruition here.
Yeah, the late sellers are going to get screwed here, Phil, because we're down year over year 18% on the median sales. Okay. Now, there's a lot of data that people throw around here. Our home price is down 18%. Well, technically, yes, because those are the sales that are happening. Those are the clearing prices right now, and a lot of people are still wishing and hoping that they're going to be able to get top dollar. But I live in a neighborhood, in a city, in a part of California that homes, even in '07 and '08, the homes lasted maybe 8 to 10 days on the market, because there's such a demand for where I live. It's really, really nice area. Well, we have homes going on the market now that they've already had to slash their selling prices down. Was it 20% from their selling price? Now, granted, they're trying to get 10% over the market from last year, so they're already down 10%. But here's the thing that blew me away, because they're right up the street from me, so we could see everything. They've been running open houses all of it. Nobody's showing up.
Wow.
Nobody. I mean, and a house across the cul-de-sac from them 60 days earlier sold in 7 days, top price per square foot in the whole area, and it just went off like a light switch. And this happened in '08 when the light switch went off. One of my neighbors top ticked the market, and so I think it just happened again. And this one feels different because I don't know how many young people with families are going to be rolling into these homes that are already outrageously expensive. I don't even consider the price of my house my net worth, because I know it's probably overvalued by 30 or 40%. And I think that's just going to happen again. I think we're going to see another sharp reduction in price, but I think this is going to be the bankruptcy event for retailers. I mean, realtors, because this lady's been sitting out here doing open houses now for the last 6 weeks and getting no action. Another neighbor pulled his house off the market. Nobody showed up at all. And it's because obviously these homes are beautiful and there's a market for them, and people want to live here desperately, but they can't afford it. And now I think we're going to drive down to more affordability, if you will. We'll always be premium. And I think you're the same thing, because you live in 2 areas, Phil, where in the past that if you even sneezed wrong, somebody showed up at your house to buy it.
Right.
And I think that's changed for you too.
Yeah, it's the same situation where you're not getting the demand that you saw even, 3-6 months ago. Part of the reason why it turns off like a switch is because jobs situations changed. And we've seen a number of large companies signal layoffs or have laid off in the last couple of months. You get these WARN notices, WARN, where larger companies have to file them and notify that they are laying off. There's a certain percentage of their workforce that triggers that, but we've been seeing a number of those every single week now. And so I think that's part of it too, where people, if you start worrying about this job security, last thing you're going to be doing is shopping for a big ticket item, especially like a house. You're going to make do with what you have. And the other thing too is I think there's a lag effect in interest rate hikes, and I think that we're starting to see that as well. That also plays into jobs too, because there's a lag effect in job loss when it comes to higher interest rates, because it starts to filter its way through the economy and through jobs or through the businesses, right? And starts to increase the carrying costs for businesses. And then all of a sudden now they've got to start making cuts. So I think all of that gets to a point where you all of a sudden, it feels like the switch clicks off, but it's a building of these things, and there's a lag effect, and it all seems to hit at once usually. And so I think that's why we're seeing what we're seeing here.
Yeah, and Phil, if you look at the chart that we have up here, remember guys, Eiffel Towers, which just is forming right now, they retraced retrace about 87% of the move. So you're looking probably at a median price of homes dropping another 25%. Okay. And the type of inflation we're getting is a weird kind of inflation. So it's really wrapped around things you absolutely have to live. And people say, well, you have to live in a home. Well, you don't have to live in that home. And I think every city in the United States now, except for New Orleans and I forget the other city, it's cheaper to rent than to buy. And I think you're going to see that play out. And here's the other thing that's different. Demographics have changed too. So people with big homes aren't going to find buyers because family formation has collapsed. So, how many people are going to want a 5 and 6 bedroom home in a nice area? Those people are now empty nesters. They're trying to get rid of that home so they can downsize. And there's nobody left to buy them unless you're buying it on speculation.
Mm-hmm.
And, then you're in a whole different ballgame because then you can really lose money. So I fully expect to see this thing, Eiffel Tower back. Is at the bottom there at the 2020 area there? I would say that we would bottom somewhere in the $350,000 range, and it's primarily going to come out of the back of the higher priced homes. I think the cheaper homes are always going to have a bit of a bid because there is still competition with rent yet. That'll fall away. But these people sitting on these homes now I'm lucky, my home's only 2,000 square feet. So it's not a big home. It's just in a nice area. And so it's not too much home for people. That's also becoming a problem. You saw durable goods orders collapse, Phil. So there's issues all the way around. So, just you have a mortgage on a home means nothing. I mean, I have a $6,000 garage door to replace next week. Who has that kind of money in general, right? A garage door. You know what I'm saying? It's like, owning a home now is not cheap. And, just like we see people see with car repairs, all that aftermarket stuff now is just getting really, really expensive.
Right.
And now people are just like, hey, it's not worth it, and I think you're going to see this thing continue to fall. But it's just part of the economic malady. And you saw car price cards falling too, Phil. So I think, basically the legs of the stool are starting to get sawn off here, and it's going to get really, really ugly.
So guys, let us know what you're seeing in your neck of the woods in terms of housing, house market. Are you seeing big drops like this, 10, 20% yet? Let us know what you see in your neck of the woods. Leave the comments below. Otherwise, guys, thanks for watching. Please hit like and subscribe. We're still running our specials. If you didn't catch the Black Friday specials, we're going to extend those out a couple more days. So check them out at tradegenius.co. We'd love to see you in the room with us trading these markets. We'll see you guys on the next video. Take care.
Trade Genius.